In this video, guys, I want to talk a little bit about being right versus making money, especially in the current environment when I'm filming this, which is the coronavirus crisis. Stay tuned. Hey guys, warm welcome to you. Right, so I see this pattern happening a lot, and I've fallen into this trap years ago and realized that it doesn't serve me, it doesn't help. And in actual fact, when you look at some of the very prominent hedge fund managers and traders who are making statements and are doing interviews and stuff now, they are doing exactly this. So even if you don't rate my credibility, rate that these guys are doing this. So maybe it's something to kind of mirror. So what I'm saying is this, is that in these conditions, everybody has an opinion. Everyone has an opinion on the effect of the virus itself on people's health. Everyone has an opinion on the effect on the economy. Everyone has an opinion when we go to the markets of what the price of gold's going to do, what the price of the dollar's going to do, what the price of the equities are going to do, what the price of the asset. Everyone has an opinion. And at the moment, we're in this bizarre situation where literally the whole world is giving their opinion on all of those topics. Maybe some people don't give a doubt about the market, fair enough, I understand that, but they're giving their opinion on all these topics. So you're getting a flood of opinions. And the thing I see that the trap that traders fall into, like I say, been there, done that, as I do with many of my videos, guys. I'm sharing with you mistakes I've made, hoping that if you make them, they're small and hopefully avoid them altogether, but we know we have to make our own mistakes often in trading, is that you're trying to be right. You're saying, hey, I want to be right. I want to make a good big call. Now, whether you're publicly on social media sharing this or whether you're kind of doing it to yourself internally, there's still the same. It's a lot of difference between that and trading to make money. So what is the difference? So the difference is this. It's like, okay, let's imagine I think that the market is going to revisit lows. Okay, it's bounced and I think it's going to revisit lows. Now, a call would be to me to say, I think the market's going to revisit lows. And if I was a social media kind of person, I'd be posting it on social media, outside of YouTube obviously, I'll be posting it on social media saying this is what I think is going to happen and blah, 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 and I'm determined I'm going to be right. If I wasn't, I'd be saying I think this is going to happen. Versus, okay, my thesis is that we're going to revisit lows. How can I make as much money as possible with the least amount of risk? And how can I express that trade in the best way? Now, that might not be selling now and closing at the lows, which is what the kind of call trade would be, selling right now. It might be waiting for a specific level to break and then riding the last third of the move. So that makes you money. The call is making yourself look good either to other people or to yourself internally, going, I made the call, I knew it was going to hit the low. And so, splitting these two things up is really, really important. And very often as well, you can have an opinion. You can say, hey, I think crude oil is going to do this, but you don't want to express a trade because you can't find a good trade to make in it. And this is so key, guys. We so get caught into this trap of our thoughts, especially in the current environment. We have our opinions and thoughts and this, and we want to express the trade, and we take the trade, and it's not a trade. It's not a trade set up in the slightest. It has no credibility, it has no technicals, it has no structure to it. You can't quantify the risk well. The risk-reward ratio is all skewed up. You're chasing stuff. It's a mess, and you're only doing it because you think, hey, I'm pretty sure this is going to happen. And it's some big trap that I've fallen into it before, but I see traders doing it now, and we have this kind of heightened emotion. They're falling into the trap of kind of placing their stake in the ground and saying, hey, I am now a bear of equities, rather than I'm just trading to make money. I may have a feeling and thought of what's going to happen, but it doesn't affect how I place my trade. My trade has still got structure to it. My trade is still based around my theory of my filters and my triggers and my risk management. And regardless of that, I need to stick to that. So be very careful with this, guys. It's so easy to fall into. We're human beings, right? We have opinions. We want to express the opinions. We want to be right to ourselves. We want to think that we're kind of making the correct judgments. But there's a big, big difference. There's a chasm almost in between, trading that and actually calling it. And the trouble is when someone as well is very vocal about their calls, it's very hard for them to be wrong. And probably I know, so I say, and you probably know, is that you might make a call, you might get stopped, and then you hit it, and then you squeeze everything out of it, and you run that thing, and it becomes a nice profitable trade. And just because you got stopped on the first 3 times trying to get into this trade doesn't necessarily mean that the trade was the whole kind of the theory wasn't a bad trade, because overall you've made money. Tick the box, great. What's the next one? Whereas, and actually, very often, of course, you're wrong. You take your stop, you move on, you reassess, you look for the next setup, the next setup, the next setup, and what happens at the end of the month is what matters, not what happens individually. The trouble is when you've put your stake in the ground and said, hey, I'm bullish on this or I'm bearish on this, it's very hard for you to change your mind like that. And of course, the market just changes instantly. Market can just kind of move and change the structure instantly. And bizarrely enough, when you're a trader, you're trying to find the spot where it is that turning point, where, okay, if it does take out that level, then things have changed. Because if you can find that little turning point, it means you can increase your position size, your stop can be structured. You don't want to have to wait for the market to kind of wind and wind for you to see if you're right, especially if you're a short-term swing trader. You want to find that inflection point where, okay, it's broken through that high. Now, if it comes back through that high, I can structure a trade around that, and that might change and break the next day. And of course, if you're making bold calls and statements either to yourself or to others, it becomes very difficult then to backpedal and kind of adjust and adapt and be nimble. That's one of the benefits of being a retail trader. We don't have to be in the market all the time, and we can be nimble. We can come out, we can wait, we can reassess, we can go back in. We don't have to5catch all of the move. We're not deploying billions of dollars worth of capital, having to extend the order over multiple days just to get into the market. So we have the ability to do that. So anyway, the point of the video, guys, is just be careful of this. It's a trap that we can fall into, the opinion-based trap and the market calls versus making money. Decide what's most important to you, decide which side of the fence you want to sit on, and then focus on that. And by all means, keep informed and get into discussions and chats about stuff, because we're human beings and we enjoy that. But have that separation and split between that and actually your trades, because your trades, if you just based on opinion all the time, you're going to struggle to kind of make the consistency that you want because of the risk management and all this stuff and the egos involved in it. Whereas if you're structuring your trades purely based on good, solid setups, strategies, you're not always going to make money. Of course you're not. And maybe you don't make any money in this period of time at all. Maybe you just tread water and you come out of it a better trader anyway. Regardless of that, the point is, guys, is that that's the difference between the two. And if you can focus on the trading and the trader part of you more, I think you'll get better results. Take care. See you in the next one. Bye-bye.